Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a filing that's a bit like finding a $20 bill in an old coat, except instead of a 20, it's a convertible note and a purchase agreement that could change everything or nothing at all for Liberty Star, Uranium and Metals Corp. Liberty Star, Uranium and Metals Corp filed a Form 8K on April 28, 2025. This report is essentially a snapshot of a significant event, a new financial agreement they've entered into. Let's break down what this means for the company and its future. The main event is a securities purchase agreement. Think of this as a contract where Liberty Star is selling something to an investor, 1800 Diagonal Lending LLC. In this case, they're selling the right to receive money in the future with a twist. Under this agreement, Liberty Star is issuing a convertible promissory note, which we will refer to it as the note to 1800 Diagonal. The note is a promise to pay back $89,650 cash, but it can be converted into shares of Liberty Star's stock. It's like having a coupon that can be exchanged for actual ownership in the company. The note has a few key features. First, it carries an interest rate of 8%. This means Liberty Star will have to pay 8% above the borrowed amount. There's also something called an original issue discount of 10%. It means that Liberty Star receives less money up front than the face value of the note. Essentially, 1800 Diagonal is buying the note at a discount. The note matures on February 15, 2026. This is the date when Liberty Star needs to repay the money, unless, of course, the note is converted into stock before then. The most important part is the conversion feature. The terms of the note specify how and when 1800 Diagonal can convert the outstanding amount, which includes principal and interest, into shares of Liberty Star's common stock. This conversion can dilute existing shareholders, meaning each share that is already available for investors represents a smaller piece of the company. If 1800 Diagonal converts the note, they'll become a shareholder and the ownership percentage of existing shareholders will decrease slightly. For the full details, the filing includes the actual convertible promissory note and the securities purchase agreement as exhibits. If you're really into the nitty-gritty details, you can check those out. The filing also mentions that this new note creates a direct financial obligation for Liberty Star. This isn't surprising, as borrowing money always creates an obligation to pay it back. Now, what does all of this mean for Liberty Star? On one hand, it's getting immediate cash. On the other hand, it's taking on debt and potentially diluting its existing shareholders. Whether this is a good move depends on how Liberty Star uses the money and whether it can increase its value enough to offset the dilution to consider. First, their strategy revolves around uranium and metals exploration. These markets can be highly volatile, with prices and demand changing rapidly. So the new cash could give them flexibility to invest more aggressively in their exploration project. Second, the risk lies in the possibility that the note will be converted, which could be a major dilution for the current investors. However, this might be a necessary risk to move the company forward. Overall, this finding reveals a small but important financial maneuver by Liberty Star. It's a calculated risk, balancing the need for capital with the potential for dilution. Whether it pays off will depend on the company's execution and the market conditions for uranium and metals. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more corporate deep dives.